Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look in euro. Well, this week the major event that we've got was, of course, the Fed statement, the Jerome Powell statement about the Fed policy in the long term. And by our view, that the Fed statement actually has become even more dovish than market expected. Although we do not see this sort of the reaction on the markets. And its reaction stands a bit not as strong as it should be compared to what Jerome Powell has said. He said even more than just to extend existing policy, to extend the dovish measures that exist currently on the market. He said that Fed aimed on the 2% inflation, and it put its strategy, Fed policy, monetary policy, in direct relation to the condition of the employment market. And from that standpoint, he said that Fed even could let interest rates to rise slightly above the 2% if employment market will need it, and if it will need more extended supportive measures to the economy. So that's what has been said. But a reasonable question exists here. So we haven't seen the inflation above the 2% since 2012. How Fed intends to achieve this? This is first moment, and second moment, that's also stands in relation with this question, what will happen if Fed will not achieve the 2% inflation at all? So that's two major questions that stands on the surface. From that standpoint, all eyes on investors definitely will be on the meeting in September, because Jerome Powell probably will have to provide some more details to the strategy, how Fed intends to achieve this. And currently, Fed actually stands in the counter trend to other major economies where the measures, this government, the central banks, trying to contract and hold the measures to not let overheating of the economy and keep them some reasonable level. The European Union, they have adopted the 1.3 trillion help, but nothing since then. United Kingdom hold rates tight without no cutting and also providing some help, but with a reasonable judgment about this help, using the common sense. While the United States, we see that they provide more and more, and it's more should come from the Congress. They now stands in discussing between the Senate and the Congress what measures to unemployment people should be. But that's also is counting for the trillions. So that definitely keeps the major bullish driving factors with the euro valid. And in long-term perspective, it seems that euro indeed should show the upward trend. In the shorter term, euro has some technical limitations that could lead to some temporal pullback, temporal retracements, but they are mostly stand short term and doesn't impact currently on the major tendency. So speaking on the short term technical situation, we do not have some real bright setups, real bright patterns that we could use immediately. That's actually the reason why previous week we mostly were dealing with the Great British Pound. It has shown really much better setups for trading. It's more comfortable. But on the euro, what we could say, you know that above the current levels, around 121, 122 area, stand some targets. We have the monthly COP target, we have the butterfly target on the weekly chart. And they have all chance to be completed in the nearest week or maybe 2 weeks. Second moment with the euro baht. Currently, because market was standing in a tight range within the 3-4 weeks in a row, the hour baht level has been corrected, it's moving higher, and currently we have no big problems, no limitations from this standpoint, from the point of the overbought. Not on the daily, not on the weekly, so here is free space. Let market to move higher and complete finally the target around 21 and 22. So at the same time, we see the changing of the sentiment in the overall net position on the euro. It has increased again last week, but if you take a look at the numbers, you'll see that major increase is coming from the closing of the short-term short positions. Probably traders have taken some shorts here, possessing themselves for a possible Jerome Powell speech and for some reaction on the major resistance that euro has. But with this recent statement, recent new inputs that we've got from the Fed, that positions have been closed. And that led the net position increased again. But open interest on the euro currency has dropped. It means that overall sentiment is changing from aggressively bullish to the more moderate position. And it means that more sooner rather than later, but euro will have to make some pullback, some technical response, technical retracements, just to take the brief and relief on the recent rally. So investors need to repossess their positions, and that potentially could happen right from the targets that we have specified, so right from the hitting of the major COP on the monthly chart and weekly targets around 21.50 area. So that's what we will consider in the nearest time. Speaking on the daily and intraday charts, right here, what we have, first of all, on the Friday, markets has chosen the direction as it's moving higher and almost closed above the top of the high wave pattern. That's definitely bullish and suggests the further upward action. That's what we have on the daily. In the second moment, here you see the clear signs of the bullish dynamic pressure. Trend stands bearish by MACD. The price action is forming high lows. It suggests that the new top here should happen in the nearest time. So the chance on the testing of this trend line and breaking it up now stands really significant. From that standpoint, we should keep an eye on a few moments. So first of all, on the hourly chart, take a look what we have. Market currently is forming the pennant, which is potentially the bullish continuation pattern. But in general, market should not break significant support area. And such a support area here, we have the support cluster around 1850. You can see that this is natural support. This actually, let's call it as a Powell consolidation. So market entering in this consolidation with this expectation of the Fed state. Now this Powell consolidation has been broken. Market could retest it. This is also confidence support. So since markets now stands in a mode of abandoning of this consolidation, in the mode of the acceleration, it should not show deep retracement and dropping back to the lows. That's not what we would like to see. Otherwise, this will be doubtful perspective for the upward continuation. If market indeed stands bullish and supporting and following the theoretical our view, it stands in the upward action, it should not break this area. So just keep an eye on it. Whether market will start upward action right from the pennant, or it will show deeper ABCD retracement, forming garter steeple to buy here, this doesn't matter. So both scenarios are suitable to us. The one thing that we would like to see is that market should hold above this area. Returning back in this consolidation, well, in this case, it would better sit on the hands and do not take any position. Of course, we would not see this kind of action right from there to the downside. So if our suggestions are correct, the upward action should continue right either from the pennant directly, or maybe market will show some ABCD here, reaching with this, retesting of this support, and then turn up. So that's what we'd like to see. Well, so let's see how situation will develop. In September, the more activity should come on the markets as the vacation time is over. So, well, now let's see whether market will complete the targets that we have specified.